You have Putin's Russia, which is somewhere in between, and you have the oligarchs still very powerful. And we have India's mixed up economy. We sort of probably took the worst of all worlds, the worst of capitalism, the worst of socialism. So I'm asking you, what does this mean? What has the Great Recession done to our ideas, our notions of what was capitalism? What is socialism?
Well, I think in fact, it has stirred a lot of debate. It has stirred a lot of debate on, first, the whole notion of efficient markets, and it's raising question on capitalism itself.
Where the markets have that self-correcting...
Right, this invisible hand of Adam Smith. I mean, where is this invisible hand? So, but to get to the real fact, it's throughout history, there's never been really unfettered capitalism. You know, there has been... Government has always had a role, and rightfully so, because I think we've proven enough times that you cannot have unfettered capitalism. It will obviously lead to monopolies and oligarchies, etc. But the question is, and we also know that too much central planning has not been effective either. So we need a healthy balance between the two. But there doesn't seem to be a pendulum that swings to the right balance. It's always seems to be moving either off
from one extreme to the other.
And it's not, well, I would like to be a little bit more optimistic and say it's declining slightly. But does it take 30 years for every swing to come back to the center?
So are we then going to see WWW, the World Wide Web, kind of over and over again?
Yes.
You know, you had Ronald Reagan talking about the government is not the problem, the government is not the solution, the government is the problem. This is the early 80s.
Yes.
And then you have people like Francis Fukuyama, the torchbearers of free enterprise capitalism, pronouncing the end of history, that the only way forward was free enterprise capitalism, liberal democracy. But these same individuals, including Professor Fukuyama, is eating his own words, because circumstances have shown the importance of the state and the importance of the government in ensuring, you know, these so-called unfettered markets don't go absolutely berserk as they did.
Yeah, and just as a point to clarify, even though Reagan said those, you've got to remember at that time, he built one of the largest deficits at that time. So there's the rhetoric and then there's the reality. And the reality is the government plays a major role in funding and spending in every economy. So yes, but the question of regulation, it all boils down to the right regulation. And I would be
heavy-handed, light touch, again, that balance.
It's the right balance. I won't even call it heavy-handed. I'm just saying it has to encourage innovation. It has to encourage small business to thrive. It has to discourage companies from growing too big. It is possible. I mean, we are, if we are smart, I mean, not smart, it's not the word, if we are able to, I don't even, just sensible is the word I was looking for.
Okay.
We're sensible and we say, here's where we draw the line. But look at what's happening in the States. The Basel Committee is coming out strict on saying the too big to fail syndrome is what can create these negative incentives.
Because you thought Lehman Brothers was too big to fail, or AIG, which is the world's biggest insurance conglomerate, couldn't fail, but it did.
Right. So we say we don't subsidize taxpayers' money, using taxpayers' money to encourage these companies to grow. But the lobby is so strong. I'd like to see what happens.
Now what's happening, Anoop, across the world? It's not just Occupy Wall Street. There's a huge amount of social unrest with what are perceived to be growing inequalities.
Right.
The economists, when they claim that whenever economies grow, inequality, sort of widens, your so-called Gini coefficient, you're bound to see sort of the robber baron capitalists have their way. You're going to see greed overtake everything. Corruption goes up. Food inflation go up. I don't think people are willing to accept these as inevitable. And we see protests across the globe, including in India.
Yep.
To suggestions that just because your economy is growing at a decent clip, it will automatically result in a widening gap between the rich and the poor, food inflation, growing corruption, and so on and so forth.
Yeah, and if you recall from our days in college 30 years ago or whatever, we used to discuss this inequality issue and always thought, it was only happening in emerging markets and not in the developed markets. But the story is now the other way around. The middle class growth in all of these developed countries is shrinking. In fact, the gap is widening. We have, I'm not too pessimistic, but I think the emerging markets, if properly managed, will probably narrow it down more than the developed markets at this point in time. So yes, what we have had is a system that has encouraged the wealthy to get wealthier. The middle class is like up and down. In good times they do it, but as soon as the economy comes down, they go worse off, and that's why it's like a leveraged firm. You know, if you're doing well, you do okay, and you can survive, but otherwise you fall really bad. This is happening globally now. We see that as a matter, and that's why
In
the
fact,
coordinated action is the key.
All right. Now, do you really see that happening? Because the group of 20 is a pretty diverse bunch of people. You have no consensus on a host of issues. And I'll give you just two examples. Complete breakdown on talks on climate change, especially this whole issue of legacy. Who pays? Does the polluter pays principle? The whole issue of equity. Secondly, the World Trade Organization. A complete limbo. The Doha development round for the last decade and longer has been in a state, it's as they say, Doha is dead as a dodo. I mean, there's no consensus on the whole issue of farm subsidies, on whether developing countries should open up its markets to manufactured products from developed countries. So, why do you think the G20 can actually design coordinated action which would prevent that double dip recession?
Because I'm looking at it, I'm comparing it to a scenario without coordination. But getting back to your point about the coordination by G20, hopefully the coordination is more than the G20. We haven't had these stalemates because of the fact that India, China, and many of the lesser countries have a vote, and therefore they can express their opinion and also try and get their own agenda in order, which is fair and fine. We need not exactly a consensus, but we need a solution that optimizes,
a bare minimum sort of understanding of sorts among these 20 countries.
Let's put it this way: the best Pareto and Pareto optimal, where it's suboptimal. Sorry, where it's
You've
the
got
best
to
of the.
explain this. Guys who are watching you won't understand.
Sorry.
What do you mean by
No,
it?
just saying that among all the alternatives, if you could design all the different alternatives available and say, please 4 countries, please 8 countries, please 12 countries. It may not necessarily the 12 countries that we should choose the largest, but somewhere in between where it still maximizes and it's overall beneficial in the overall output is best for all of them. But having said that, we have the group of negotiators at these meetings, and then we have the politicians in the background. Deadly mix. Doesn't work.
Mix, huh?
Nope.
I don't share your optimism. I'm
You mean you're optimistic?
You are optimistic. You said we might still avoid that double dip recession. I tend to be a little more pessimistic.
Well, I was focusing more on WTO
Yes.
and the climate change.
Yeah, these are two instances of how the north-south divide is actually widened and not come closer together. So therefore the question is how could the G20 sort of work together?
That's a very easy answer. The central banks. And the central banks are the most independent group in every country. And they are like-minded to some extent. I don't know if that's good or bad, but because they're independent, they can coordinate. Look at the ECB. Here's a European Central Bank that is willing to actually do certain things to bail out countries. They're not supposed to be doing that. Their job is monetary policy, not in the business of bailing out countries and pushing politicians to come to fiscal solutions. So, and that's the key difference between this and other organizational committees. That the central bankers are independent, and as long as they coordinate, which would have been unthinkable in the 30s, there is, in my opinion, hope for prevention of a double dip.
Okay. Anoop, I take a third break. It's the final break in our conversation. We still have about 13 minutes or so. I want you to focus on 2 or 3 points when we return from that break. I want you to look at Asia. I want to look at China, India. Look at whether these 2 countries, the 2 most populous countries in the world, what are the key lessons that we need to learn from what has happened across the globe? Because you may or may not agree with me, but I would argue that since these 2 countries account for 40% of the planet's population, in a sense the future of planet Earth also depends on the economic development strategies followed by these 2 countries.
Sure.
So I'm going to get back to you. We're going to continue our conversation. We're looking at the Great Recession, and after the break, we're going to talk about the lessons that countries like China, India need to learn. We'll be back with you. Stay with us. Welcome back to the fourth and the final segment of this discussion on the Great Recession. With me here in the studio is Professor Anoop Rai, Professor of Finance at Hofstra University in New York in the United States. Anoop, when you look at India and China emerging as important players, drivers of the world economy, 20 years ago, India and China still had 40% of the world's population, but we had barely 10% of world GDP. We are now about 20%. We are about a fifth of the world economy. And maybe 10 or 15 years now, what Angus Madison say, we'll have about 30 or 35% of the world economy.
Easily.
The US has less than 5% of the world's population, 300 million out of 7 billion people on planet, but it was gobbling up about a quarter of the planet's resources. But we do see the importance of the United States and Europe, the two biggest economies on the planet, slowly but surely shrinking, and India and China becoming relatively more important. Is there a general recognition that this is an almost inevitable process and this is good for the planet, or is there a huge amount of resentment, manifested in different forms of protectionism, including your H-1B visas and Obama saying we want jobs in Buffalo, not in Bangalore?
Correct. Well, first let me say, for the last 2 years when I've been teaching both finance and international business, to me, I think India and China is what's going to bring this global planet out of its mess and probably head into the future. We want strong growth, and they will be key players. The US and UK and Europe have to acknowledge that. I think most economists will agree with that. To me, the comparison is like post-war, World War II. Europe was in complete devastation. We pumped in money. They grew, and then they led to a
You're talking about the New Deal and Roosevelt's the whole plan to reconstruct.
Well, Roosevelt New Deal was before the war, but afterwards it was more Maynard Keynes and Smith with the Bretton Woods system, the World Bank, the IMF, all put in to bring Europe out of its devastation. And then as a result, we had a huge spurt in demand, and supply followed at the same time, and we got out of the recession very quickly. India and China is now on its own, but they are a big source of demand, and they'll be a big source of supply. So they are critical to the growth of the world economy in the future. As to the fact about the resentment, well, that's where we come in. As educators, we have to tell the true story. That is, it is inevitable. The global share of US and Europe is going to shrink. But the thing to do it is look at it positively, not negatively.
All right. I know if every citizen of India and China started consuming like the average citizen of the United States, we'd need 2 planets Earth. We just have one. But the new balance of terror, I want a few comments from you on that. The dollar and the yuan, Earlier it was the erstwhile Soviet Union and the US who had enough nuclear weapons to bomb each other or bomb the entire planet out of existence. Today, the America might scream blue murder, but the Chinese are not going to devalue are not going to appreciate the value of their currency to please whoever's in America. And China has those, I don't know how many trillions of dollars in the US Fed.
About 1.3 trillion plus.
I have heard bigger figures, but the short point is this kind of new balance of economic terror. Walmart started by Sam Walton saying he's going to create jobs for America and he's going to sell American goods to Americans. Now Walmart, 75% of what Walmart sells to Americans is made in China.
Exactly.
So how do you see the dollar? Will it still remain the reserve currency? How do you see the yuan and China, this whole trade surplus business?
Before I get to that, what's funny about Walmart is the people who shop at Walmart are the ones that potentially lose their job, because they're the ones who need they're the low-skilled workers that go to Walmart, and yet they're spending on a company which ultimately is taking their own jobs away. So it's kind of an ironic that way. This issue of dollar versus the yuan comes into our studies quite a bit. There is no question the yuan is going to take on more and more importance over the time, but I have two reservations on this. One is that even though I'm very optimistic of China, China is still an emerging economy. Remember the days when Japan used to grow at a rapid pace and Americans were constantly fearful Japan's going to take over the country, they're buying
all the
real estate.
villains in Hollywood looked vaguely Japanese.
Right. But what happened to Japan? Entered into a crisis. China and India too, to that extent, to manage the economies is not going to be easy. It's going to be very difficult. And as a result, if everything goes right with China, it'll be fine, but it's going to be impossible. So I think the dollar, the dollar replaced the UK in the 1920s. For China to replace the dollar, it's going to take much more than growth. It'll take a lot of, not only growth, but a lot of stability, stable growth over a period. If they can achieve that, great. But
okay,
I find that
quick comment. This is a tough one.
Yeah.
Where do you see the price of oil going? It's around $100 per barrel. Will it again zoom up to 150 and then come crashing down? Do you see that volatility which we saw in 2008 happening again?
No. Well, I do see volatility, which I do not like it. As a rule, the value of the oil should go up, steadily up, as China consume more. So as an economist, I'll play it safe and say it should rise in pace with GDP.
One hand, other hand. No right-handed. No economist has two. No hands. Okay. A few quick comments on India. How do you see the Indian economy? Our rate of growth has come down by at least 2 percentage points. For the first time in the history of India,
right.
We grew at about close to 9% 4 years in a row between 03 and 08, and now it's down to 7%, perhaps below 7%. We were better prepared to we in India to withstand the shock of 2008. We are not so well prepared. We've had a bout of high food inflation, though of course food inflation is down now.
Right.
The rupee has sharply depreciated against the US dollar. We're importing about 80% of our total requirements of crude oil. Things are not looking that good in India by our own standards, though you could argue that 6.5 or 7% GDP growth is great by international standards.
Correct. I heard about this 2% dip as well as the dollar, but I have to say, overall, because we are summarizing everything, I think it's positive. Now, on the rupee front, I would like to see actually the rupee devalue a little bit more rather than the other way around. Even though we're importing, I think it will always be good for the exports sector.
$55,
55
rupees to a dollar.
I would even go as high as 60. Given the inflation rate,
wait. Those export markets don't exist,
Yeah.
I mean, we are looking southward, south-south economic relations is good, south-south trade is growing.
Right.
But India's traditional markets in Europe and US are not expanding. Your garments, your handicrafts, your processed foods.
That's correct, but it will if it was down to the 60s. So let's put it this way. Let economics work on its own. We have a high inflation rate here relative to the rest of the major developed countries. So as a rule, we should devalue, otherwise you become uncompetitive. And that's one of the things that I am a little disappointed, that the manufacturing sector of India isn't getting on par with China. And I think to do that...
Even though our auto sector is not doing badly.
Yeah, finally.
A share of GDP, it might soon overtake agriculture, but agriculture still accounts for more than half of the employment. That huge structural imbalance we have in our country. Agriculture is 16-17% of GDP, but provides a livelihood to more than half the population, about 55 or 60%.
Which will change eventually. This is like the US in the 1900s or late 1800s. So it will change at some point in time. But manufacturing output, I think, apart from the auto sector, there's also an issue with quality, with expanding. and we never got to the last part, technological innovation. So we have to take the lead in technological innovations and in the manufacturing area as well as in consumer goods.
But you know, that's the paradox about India. It's a cliche, but true. You know, India has produced 1 out of 3 computer software engineers on planet Earth, but also India is home to 1 out of 3 persons on this planet who's abysmally poor, who's malnourished, who's sick,
Right.
who's uneducated, and so on and so forth.
And that's the same in China too. You know, that gets clouded behind the fact that there is a huge disparity of income in China too. So that's where is my prediction that these countries will do well only if they're able to resolve these issues at the same time. I think most economies would agree on that. But how do we do it, given that India is a democratically elected country with politicians that, you know, with politicians just like the U.S. Who do they cater to? Do they look at the long run or do they look at the short run?
So where would you place your bets, you know? Single party rule, Chinese Communist Party, state capitalism, or India's noisy anarchic democracy? I mean, we've had 15 general elections. On 7 occasions there have been regime changes, but peaceful regime changes.
Right.
60% of the 800 million people who are eligible to vote actually vote.
Right.
So
without a doubt, India, because this will remind you
You're
about
biased, I know.
U.S. in the
Yeah, it's all right.
1800s, the 30s in Chicago. So yes, without a doubt, that's where the Chinese system is more fragile than the Indian system, because you have a controlled system. You let loose, you let loose a lot of things out. So
okay. So let me ask you to look at your crystal ball. How does 2012, 2013 look to you? For the US, for Europe, and for India and China?
I hate to go that short-term prediction, but I'm more optimistic as a rule. I think the U.S. economy is stabilizing. If China and India continue to grow at this rate, I think we can mutually help each other and move out. So prediction is growth, sluggish, but growth. But then my history warns me, go back to the 30s, and it's the same thing. It's up, down, and then the big war. I hope we don't get a big war.
The Third World War will be fought on water and oil and...
Oh, that's another story.
That's another story. Okay. Anoop, my last question to you. We just have about a minute and a half to respond. If I can ask you to underline, to flag in bullet points, the key messages for India. What are the most important lessons that we in India need to learn from what has happened in the last few years to the world economy and the Great Recession?
The right regulation to manage both the monetary system, the incentives to the financial institutions, and a lot of incentives, which means you can spend, and I heard the government has opened up 36 billion crores, I think, to open up the infrastructure development.
That's what we need. We still don't know where we're going to get the money, though.
All right. So at the end of the day, a prudent macroeconomic policies, at the open level, and then followed by regulations that provide incentives for this market for this country to exploit its potential. It has got a lot of potential. I mean, I walk down the streets, I see it. There's does appear to be a lot of energy among the people.
Are you being realistic, not being starry-eyed?
No, maybe I'm
fact
here.
The fact that you're a person of Indian origin, is that clouding your kind of your vision a little bit?
No, I'm putting myself like 30s US, putting myself in the place. There'll be all kinds of negative things going on, but as long as you can push it upwards, I think we'll move up.
Well, Anoop, we've run out of time. Thank you very much for coming here to the studio of Lok Sabha Television, giving us your views. And I'm sure those who've heard you and watched you would have benefited from your comments and your observations. And you've just heard Professor Anoop Rai of Hofstra University of the United States talk about the most important lessons that we in India need to learn from the Great Recession. Thank you very much for being with us on this program.